Hello, everybody. This is Pastor Brian Kinney, and we're about to begin our training. Today, we're going to be beginning a series of training designed to help you um, take advantage of the tax strategies that the IRS has provided to help you build your business and to save a ton of money on taxes. Now, just give me 1 second here. Hello, everybody. This is Pastor Brian Kinney, and we're about to begin our training. Take advantage of the tax strategy that the IRS has provided to help. Today, we're going to build your business that the IRS has provided, save a ton of money on taxes. Build your business. Just give me 1 second, and to save a ton of money on taxes. Just give me 1 second here. Okay, sorry about that. I have multiple windows open, and excuse me, when I have multiple windows open like that, the tendency is for me to have a lot of different feedback coming from these windows. So I have to close them. I'm holding. I still think I still have one more open. Give me 1 second, please. Okay. Now, hopefully everything is straight. So we're about to begin our presentation right now. So I'm going to turn on our screen sharing mode and we are going to get started. And this is being recorded. However, um, we will be repeating this particular training on a further date. So as I stated, my name is Pastor Brian L. Kinney. I'm the CEO of Business Smart America, and I'm a Solivay Senior Ambassador. And today we're going to begin a series of training geared towards teaching you how to take advantage of the various tax reduction strategies that the IRS gives you for owning a business. And today our topic is how to create an instant pay raise. You know, life can be very complicated. We have to deal with navigating through a maze of money problems, uh, problems dealing with our children, vacations, home, you name it. But one of the biggest problems facing most Americans today are taxes. Let's face it, everyone knows taxes are too high. We pay income taxes, Social Security taxes, Medicare taxes, excise taxes, payroll taxes, sales taxes, and starting next year, there's going to be the Obama tax and more. And quite frankly, we pay, you know, it's against the law to pay taxes on your taxes, but you know, in some states, you literally do have to pay a tax on your taxes. California is one of those states. Fact is, Americans will spend more on taxes in 2014 this year than they will on food, clothing, and housing combined. According to the Tax Foundation, in this year, 2014, Americans will pay $3 trillion in federal taxes and $1.5 trillion in state taxes for a total of $5.4 trillion or 30% of all income generated in this country. And when you take taxes and our bills, it is a burden, is a financial burden on the backs of most people. So what is the answer? Well, One of the answers is to understand the two tax systems. See, there's one system for W-2, 9 to 5 wage earners who work what is commonly called a job, which many use the acronym just over broke. And there's another system for business owners. Now, you need to understand America was funded on entrepreneurship. This nation wouldn't be the nation that it is if it wasn't for entrepreneurs, business people. So guess who has system? And if you guessed the business community, entrepreneurs, folks, you are absolutely 100% correct. And if you want to understand how the key to accessing these benefits that you get for owning a business, there's a concept that you got to understand, and that concept is the concept of itemization. And once you understand that concept, you still got to understand itemization. You understand that, you got to understand itemization, because folks, the key to actually reducing taxes is, if you guessed it, itemization. Now, there are three primary forms that allow itemization on your taxes: the Schedule A, the Schedule E, and the Schedule C. Now, I'm not going to try and turn you into a tax practitioner, but I do have to give you a little insight into taxes so you can understand the power of what I'm about to show you tonight. Now, first of all, the Schedule A, this is the only form that the IRS calls itemized deductions. But trust me, it is not the only one in which you itemize them on. But this form allows you to itemize things such as mortgage interest if you own your own home, charitable contributions, those donations that you make to your church or whatever, non-reimbursed employee expenses, property taxes, and more. Problem is, these deductions are normally not useful unless you are the owner of your personal residence, because you have to exceed what they call a standard deduction, which we're not going to cover tonight. I just want you to be aware that it has to be over a certain amount before it can be of any value. The second form that allows it is the Schedule E. However, this form only allows you to itemize expenses that are associated with rental property. So if you have a rental property that you're renting out, and if you pay gas, you can write that off. If you have electricity, you can. If you pay water, gardener, if you pay mortgage interest, eviction fees, management fees, depreciation, and more, you can deduct these on the Schedule E. However, when it comes to many of the tax benefits, they're minimized because the Schedule E is treated like passive income. Like I said, I'm not trying to make you into a tax practitioner, but you need to understand a little bit about these forms. The final form is the Schedule C. Now, this is the form that allows itemization for business ownership. Businesses get to write off everything associated with running that business. Now, folks, this is extremely powerful, because when you add this to your home, it becomes one of the most powerful tax reduction strategies of all. Now, when your business is in your home, you get to itemize expenses without creating new debt. Both the Schedule A and the Schedule E require you to create new debt in order to take advantage of their powerful itemization qualities. You either got to buy a home or you've got to buy rental property. So you got to create a debt in order to get a huge debt in order to be able to take advantage of the itemization power of those two schedules. Now, the Schedule C does not necessarily require you to do that. Now, one other advantage to owning your business is that you are able to set up what is called an office in your home. Now, I want to make sure you understand you can set an office in your home whether you own a business that is outside of the home or a business that is in your home. In both scenarios, you can set up an office in your home. After 2001, a special provision the IRS went in so that even if you don't have a home-based business, you can actually set up an office in the home. Now, The power of having an office in a home is that it allows you to write off a portion of non-deductible expenses. When you're home, you're going to pay a lot of things. You're going to pay rent if you're renting. We already know you pay a mortgage if you own. You're going to pay electricity, gas, maintenance fees. You might do work on the property, all right, and a whole lot more. Well, normally these expenses are totally non-deductible, but when you set an office in your home, you can now take a portion of the money that you spend on all of these expenses, and you can now use them as a deduction on your tax return. So instead of like going out and buying a property where you're going to run a business and you got to create a brand new rental bill, or create a brand new electric bill, or create a brand new gas bill, when it's in your home, you're paying it anyway. That makes it very powerful. And on top of that, you get all the other deductions associated with owning a business. I'm talking about office supplies. You get to write that off. Any money that you spend for advertising and marketing, um, driving your car for business purposes. I can tell you, you really want to be in on the presentation that Yvette does on business mileage. She's going to show you how to get $5,000 to $6,000 as a cash rebate or a tax rebate from the IRS just from this one area alone. But you also get to deduct meals, travel, and entertainment. When we go into the training on in these areas, you're going to find that you can actually, through proper tax planning, write off your vacations and deduct them. But you have to plan it properly. And there's a lot more that we're going to be talking about um, in the months to come. Now, if you own your own home and you're not paying rent, you can convert a portion of your mortgage interest, your property taxes, okay, um, insurance that you pay on your home. Normally, you can't write off the insurance, but you can convert a portion of these two expenses to what we call above line deductions. Now, you can already put them on your Schedule A, which we mentioned earlier, but you can convert a portion of this to your Schedule C, which makes it an above line deduction. And there's only one thing you need to understand about above line and below line. Below line deductions are good. Above line deductions are a whole lot better. So this is a very powerful tool that you have when you are setting up an office in your home. Now, because of the low cost to start and the ability to write off existing debts, a home-based business is perhaps one of the most powerful tax strategies of all, especially when you can set up an office in your home. You know, we're faced with debt. Debt is a burden for most people. And with today's rising costs, you cannot afford to have an income that is just an income set by an employer. Many people are trading their time for money, and they are working for a boss. I had people working for me, and I told them how much they were going to get paid. I told them when they had to work, and I told them what they had to do. And I didn't pay them one penny more than what I promised, because I set their income. Well, you can't afford to have an income that is set. You need an income that can be increased. And owning your own business gives you the potential of having unlimited income, because your amount of income that you bring in is limited only to your efforts and not by limitations placed upon you by someone else. So even though I said that you do not want to just have a set income, I got some good news for W-2 wage earners. Because when you set up your office in the home, when you start a home-based business, it will allow you to reduce your taxes that you are spending by as much as 50 to 60%. Now, this is not 100% for everybody, but for the vast majority of people, this is true. That means we can show you how to increase your take-home pay between $200 and $600 per month every time you get a paycheck. Folks, I've been able to show people how to get as much as $1,200. It's not the norm, but this is powerful because right off the bat, and when you do this, we're not talking about weeks or months. I'm saying that if you do this, you can actually go into your job today if you work on a Saturday or a Monday, and the very next paycheck, you will have this instant payday increase. Now, the way this is done is through a poorly understood document called a W-4 Employees Withholding Allowance Certificate. And when this is used with your home-based business, especially when you have an office in the home, folks, I'm telling you, when it comes to tax reduction, something powerful happens. But you need to understand a little bit about allowances and exemptions. First of all, allowances are defined by the IRS as any item that operates on your tax return to lower taxes. An exemption, which is what most people are familiar with when they fill out their W-4, that's what they're putting on there is an exemption. An exemption is a set dollar amount given per dependent plus yourself on your tax return. So what I'm saying is exemptions are allowances, but allowances are much, much more than simply exemptions. Most people claim only their exemptions, but rarely does anyone claim all of their allowances. And so, folks, this is where the power of what I'm teaching comes in. Because when people do not take in their allowances, the result is the government is able to get from the hands of unknowing Americans billions of dollars, and they don't pay any interest on it nor give any benefits for it. So they're taking your money, putting it into their bank account, getting all the benefits of it, giving you nothing. At least if you put that money in the bank account, you can get, I mean, it may be 2 or 3% interest, but you can get something from it. Plus, money depreciates rapidly nowadays. I mean, what you can buy today with $1 is going to be less than what you can buy with $1 by the time tax season comes into play. So this is powerful, folks. Now, allowances include everything that's on your itemized deductions for both the Schedule A and E. It includes what they call standard deductions. It also includes business losses from your Schedule C. So you can convert all of these different deductions into what we call allowances. This also includes capital losses. And so by properly reconfiguring your W-4 to take in consideration all of your allowances, the average W-2 wage earner can increase his take-home pay by $94, and that's without a business. Just simply by understanding allowances versus exemptions and how to convert them, the average person without a business can get an instant pay increase of about $94. However, when you add a home-based business, especially with an office in a home, this increases to about $300 to $600 per month or more. So now you can afford to spend that $200 to $300 per month to fund your part-time or full-time home-based business. I'm hoping you see how powerful this really is. But I want to give this warning. Use a knowledgeable tax professional to help you do this. Don't just pick arbitrarily any figures. You might go to a business opportunity meeting or something, and you'll hear the speaker say, well, you can bring home extra money from your taxes, because most people understand that they can do this. They just don't understand how it's done. And so they'll tell a person, just go claim nine exemptions on your W-4, and then when the tax season comes, they're in trouble. You need to make sure you have a proper analysis before doing something of this nature. Now, this also allows you to, having a home-based business, allows you to hire your children and write off their paycheck. Now, understand what I'm saying. You pay your child X amount of dollars, and we have a whole training on the proper way of doing this, because if you do it improperly, you can get yourself in trouble. And understand, when your children are under 18, you don't have to pay payroll taxes. So, folks, this is extremely powerful. I highly suggest you go out and have you some children, but make sure you're married first. Anyway, you can then let your children pay for their tuition. You can let them buy their expensive tennis shoes. Pretty much the only thing the IRS doesn't allow you to do is to make that child pay for their food. You still have to pay for their food. It also allows you to set up medical reimbursement plans for you and your spouse. In other words, each and every single one of us, especially as we grow older, find that we're faced with those things called co-pays. We are driving back and forth for examinations with the doctor. We have to pick up medication. These things are normally not a tax write-off, but there is a document that you can create called a medical reimbursement plan, which will allow you to now to write off those medical co-pays, that mileage, and that you use for going back and forth to pick up medication. This is very powerful, but this is something you need someone who knows what they're doing, who knows how to set them up, and in our training, we're going to show you how to do that. Now, I'm going to say, shh, don't tell everybody about it, because the IRS does not like it when this is done. I also have to tell you that there are some tax practitioners out there who kind of have a little bit of understanding of what I'm about to say, and they abuse it. So once again, you definitely need to have a bona fide and legitimate home-based business or business if you fall into the category that I'm about to share with you now. So if you have a home-based business, this would help some people get what we call earned income tax credit, or EIC. And that's when they have reached that area where they have borderline income. And usually it's, if you earn between 30, 45,000, you're running into that borderline income. Now, earned income tax credit can be as much as $4,000 or $5,000 that you get back from the IRS. Especially if you have 1 to 3 children who are 19 or younger, or if they're over 19, they're a full-time student until they reach age 21. So once again, if you have a legitimate home-based business, that business can help you qualify for an extra $1,000 to $5,000 or more if you fit into this category in earned income tax credit. And folks, this is free money from the IRS. There's no interest to get it. There are no credit checks, and you never, ever have to repay it. And I'm talking about, they just give you free money. They give it to you every year if you can fit into that category. And a home-based business can often help a person who's in that borderline area get that free money. So that's a huge advantage for a particular segment of the market for building a home-based business. But once again, I have to give this warning. See a knowledgeable tax professional. There are too many out there that are just doing this with no knowledge of what they're doing, and they're getting people in trouble. So let me do a quick review of what we went through today, okay? Because you want to set up a business, especially one in your home. First off, you get to write off all business expenses, advertising, mileage, etc. You can set up a home office and convert a portion of your non-deductible expenses into deductible expenses. We're talking rent, mortgage, property taxes, electricity, water, maintenance, and more. You can hire your children and write off those paychecks. Let them buy their tennis shoes. Hey, let your kid pay for their own iPhone and movie tickets. And the beauty is you get to pay, you give them the money as a paycheck and write it off of your taxes, and then they go and purchase those items. Powerful. You can set up things like medical reimbursement plans. There's also cafeteria plans. There's a whole lot of things that I have not even covered that allows you to get these incredible deductions. This one allows you to deduct your co-pays and prescriptions and even mileage. Going back and forth to the doctor and pharmacist. Very powerful. You can convert your deductions into allowances, which will allow you to reconfigure your W-4 and get an instant pay increase on your next paycheck. And with a home business, with office and home, the average increase is between $300 and $600 per month on every paycheck. But I have to warn you, and I can't emphasize this enough, all tax practitioners are not trained on how to do this. Many don't even understand the difference between an allowance or an exemption. In fact, if you're a tax practitioner, if you want them to do this for you, ask them if they know the difference between an allowance and exemption. In this one area, if you're watching this presentation, you probably know more than the average tax practitioner out there when it comes to your understanding of W-4, because most of them have no clue as to how to reconfigure a W-4. The analysis needs to be done twice a year to avoid surprises at tax time. And I say this from experience. You may have just heard a plane. I live next to an Air Force base, so you might have heard that plane come over. It was very loud. It doesn't happen often, but when they do, they are loud. And I apologize for that. But you don't want to just have this done once. You want to avoid surprises at the tax time, because you might have to write a check to the IRS that hurts you if you don't do this properly. And absolutely don't listen to anyone telling you to claim unsubstantiated exemptions on your W-4. Just because they're telling you that you can do it, do not go arbitrarily, because I hear them all the time. Just claim 9 exemptions. It could get you in trouble, especially if you don't have someone who is going through your tax return and helping you to avoid these problems. So get an analysis from an expert. Right now, we are offering an analysis that you can get from us for $135 per analysis. But if you are a SocialNediaFx brand partner or above, we will do this analysis for you for free. So if you want to get an analysis, you want to contact Yvette Jeter at Creative Tax. Her phone number is 562-251-1300. Or you want to contact me. My name is Brian Kinney, and I'm the CEO of Business Smart America, and you can contact me at 424-234-2230. Now, both of us are trained and know how to do the W-4 analysis. So contact one of us, and we can help you get that done. If you have a client that you need it done for, we'll do it for you. However, if you're not a SocialNediaFx brand partner or above, you're going to have to send us a check for $135 in advance. In closing, if you thought the training that we gave you today was valuable and like to get more training, you want to become a part of our Retire Quickly Business Builders team. Now, this name may change. Our goal is to be able to allow you to start signing up after December 15th. You'll be able to go to retirequickly.biz and you'll be able to join. Until then, make sure I got your email address so I can keep you abreast. Make sure that you stay in contact with your team members. and we will make sure that you are notified when we do the training. But know that every Saturday, right now, that may change, but at the moment at 9:30 a.m., we will be having a tax training of this nature. I will be repeating this one, but I can't tell you when. Next week will probably be Yvette, who will be teaching you about the business mileage, how you can get a $5,000 to $6,000 tax rebate, gas tax rebate from the IRS. Also, this is in the works. Right now, we're not 100% how we're going to set this up, but right now we're planning on 3 membership levels. One is going to be a free membership level. This is to the retirequickly.biz program. There's going to be a platinum membership. I don't know how much. I can tell you now that the tax modules alone that are going to be a part of this membership, I was selling for $495. How much the platinum membership is going to be, I don't know, but it's going to include more than access to all of those modules. The free membership will have access to some, and then there's going to be a Solivay brand partner membership level, which is exclusive for those of you who are brand partners with Solivay. So hopefully you've enjoyed the training that we're giving. Make sure you're on our mailing list. It's not available right now, but after tomorrow, you'll be able to go to www.temp.retirequickly.biz and just enter your name in. And this is just going to be a temporary site where you can make sure you're on our mailing list, or you can make sure your friends are on the mailing list. So hopefully you enjoyed and got something out of the training. I'm switching back, turning off my screen sharing. Give me a minute here. Okay, everybody. Once again, this is Pastor Brian L. Kinney. I'm signing off. Hopefully you learned something from what we're putting together here. Even though one of our goals is to help build our team with Solivay, the information that we're providing is so powerful that any business, any network marketer will benefit. That is why we're going to have more than one membership level. So hopefully you love the information and we love you. Bye-bye, everybody. God bless.